Good evening, everyone. My name is Manoj Agrawal. I'm with Banking Frontiers magazine and happy to host today a panel discussion titled Early Warning Signals for Digital Safety. I have with me a host of panelists, very eminent people who are experts in fraud detection, fraud mitigation from the financial sector, from the banking sector, from the IT sector. And together we hope to churn some very interesting insights from this discussion. Good evening and welcome everyone. I'd like each of you to briefly introduce yourselves for maybe around 20-25 seconds, give a background about yourself and your organization. And from then we'll jump into the panel discussion. Shilpi?
Hi, good evening. I work with Kotak Mahindra Bank, as my background is shared with all of you. I head the process controls and risk containment at retail banking, and has been an interesting journey for the last 3 years in the space of fraud risk management.
Hi everyone, I'm Natalia. I'm a Chief Data Officer at Zest, one of the largest BNPL provider on the Indian market. I've been with the company for the last 6 years and taken care of all their data, AI, and machine learning initiatives, largely with regard to the risk assessment and fraud prevention. Overall, I'm coming from economics background, and the last 15 years I spent in the financial technology sector, working in the UK for the payday lending company and covering the international markets as well. So coming with a lot of experience on fraud prevention side. Nice to be here. Thanks a lot for the invitation.
So my name is Manish Agrawal. By qualification, I'm a chartered accountant. I work with HDFC Bank and currently handling the credit intelligence and control function for the bank. So basically, we do the fraud risk management for entire bank. I'm with the bank for last 19 years and it's my only second job. So I have 2 decades of experience and have been a hardcore credit and risk professional, so as to say.
Sure. Thanks, Manoj. Good evening, everyone. So I'm BLLB with 20 years of experience in IT security as well as cybersecurity. Cybersecurity has been my passion, and specifically the payment security for last 10 years. So let's have a great session around. Thanks everyone.
Good afternoon, everyone. I'm Vishwanath. I'm with NPCI as the Chief Risk Officer. I have about 25 odd years of experience, out of which about 20 years in risk management. As you know about NPCI, we take care of almost like 70% of the digital transactions in the country. So leading products such as UPI, IMPS, FASTag, Aadhaar-enabled payments, etc. Are managed by us, including the offline systems such as check truncations and the National Automated Clearinghouse. So that's largely about NPCI for those of you who don't know about it. Looking forward to having an engaging discussion with all the esteemed panel members.
Good evening, everyone, and thank you for your time. So my name is Tim Dalgleish. I spent 18 years in fraud prevention. The first half of my career working for banks, running fraud strategy and analytics teams. And the second half of my career, I've worked for technology companies, focused on digital fraud detection and prevention. So the company I work for is BioCatch, and they're one of the global leaders in behavioral biometrics for preventing fraud and scams. So thank you again for the invite.
So friends, thank you. Welcome aboard. Let's start our discussion. I'm going to start with a very basic kind of question. What are the new modus operandi that are emerging as regards frauds? And are these kind of the new models something that experts have predicted? Or are the scammers a little ahead and coming up with innovative ideas? What is your general assessment? Vinay, would you like to start? Since you are in the payments fraud space for a long while.
Sure. So social engineering actually has been in recent focus. Okay, so be it on a phishing space or smashing random calls, or even spoofing of caller identification numbers, misusing these technologies for the gain of the fraudster, or the fraudster are actually coming up or emerging up with a new technologies for manipulation or tricking the users to compromise their credentials. right? So it's almost every day in a news something you will see. For example, 2 days back there were certain things related to malware when MIT has specifically released an advisory stating that banking customers are getting compromised, and there are around 27 high private banks whose customers are actually getting compromised through these malwares. So fraudsters are coming up with new and new technology method, as if it's happening on a 0 day. It's a 0 day fraud, which I call. So you release a product or you release a new innovation technology, they are way ahead than the adaptation of the product itself. And so that's where it becomes very important to create awareness around this. But yeah, so every day it's a new challenge in the payment industry, and specifically when it comes to social engineering or controlling the human brain, it becomes very important. Yeah.
The human brain is the strength and the weakness of the system, perhaps.
So we see it as a three layer actually, so human brain, system, and the individual himself. So if three issues are addressed, you will be able to address the fraud. But unfortunately, there are little or less control around all these three to be in sync.
Okay. Manish, what is your assessment? What is the race between the fraudsters and the formal economic system like?
Yeah, thanks, Manoj. So first of all, I agree with Vinay what he has said, that it's all about the social engineering, because if we see and the space of the frauds that we are talking, okay, they are actually man-made and not exploiting the vulnerabilities in the systems at large. I'm talking, it's not 0 and 1, but by manipulating the customer behavior. Okay, so your question is very, very interesting, and I want to give a different twist in a Maggie moment that you have given to us. Basically, relying on the 4 fundamentals. Either they would want to tempt you with a greed, or they would want to help you, or they would even threaten you. Or the 4th one, which is going a lot in nowadays, is they will offer an e-commerce. So if you see that entire spectrum of an MO, well, we can summarize this in a form of a social engineering, but these are the 4 scripts that they are creating, or scripts basic this philosophy they are creating, and they are targeting the customer.
So they're crossing the Lakshman Rekha, using these 4 scripts. Okay.
Yes.
Anyone would like to add some other perspective to this?
Yeah, Manoj, I would like to step in and just offer a couple of comments. Firstly, I completely agree with what Vinay and Manish has said. Just to give you a kind of a background, the frauds have changed now. It's evolved from the traditional fraud types, which are largely, last stolen, skimming types, etc. From that, it has moved on to social engineering. So one thing I would want to assure your audience as well is that very clearly in social engineering, the fraud can happen only if the customer participates. If you look at all these type of fraud types, typically there is device binding and there is a 2-factor authentication in most of these transactions. So technically, a fraud cannot happen unless and otherwise the customer himself gives out some essential information, and largely the customers kind of end up trusting the wrong people. So that to an extent is the responsibility of all of us here on this call to ensure that as an ecosystem we ensure right awareness takes place. That's going to be one of the key aspects. Otherwise, what happens is they have to get a contact number of a particular payment app. They go into Google and type it out, and they assume that what they get on the search engine is the genuine number. In all probability, they end up talking to a fraudster, thinking that they are talking to a genuine person. So various modes and modifications of these kind of this trickery happens. But largely, one thing which the customer needs to bear in mind is that unless he is participating and sharing some information, the fraud cannot happen. So from that perspective, to be digitally literate is going to be really important in the days to come.
That is a brain thing that Vinay referred to in the beginning. Okay, yeah. Cool. Tim, would you like to give some kind of global perspective?
Yeah, so I think it's, social engineering is obviously, it's very topical. So from what everyone's shared. And I think, from what I've seen in different markets, the dollar loss in terms of the exposure like a scenario where it's the customer facilitating the transfer, being social engineered to do something, versus, what I would call old school fraud. Old school fraud, I would steal your credentials, log into your online banking and do a payment. And now the attack is more sort of, around the human, and the customer is the victim is actually actively participating. So, I've seen numbers, for every dollar of, traditional digital fraud, it's $5, $6, $7, $8, $10 of fraud where the customer is participating. So, and it makes it very difficult because it's, it's not sort of clear cut, it's, the customer's involved in, and like, how do you protect someone who's authorizing it, facilitating through authentication, etc. So it's very much a global problem, and certainly accelerated with global pandemic. Everyone's had to become a digital native very quickly. It's my 75-year-old father had to learn how to do banking via his iPhone, right? So it's something new for people, right? So
is it more profitable to do this kind of fraud compared to the old style fraud, or is it easier? Is there a reason?
Look, I think it's a lower bar to entry, because it's not really a technical attack. Like, you don't need to write a malware, etc. You just need to set up a call center with a script and just start calling numbers or sending text messages. So the barrier to entry, I think, to commit, to start a social engineering campaign is very low. So I think it's even if your hit rate is only 5 in 100 or 1 in 100, the payday is still very high.
Okay, so the entry barriers are low. That makes sense, actually. Yeah. Let me move on to the next question, and let me invite, let's say, Shilpi and Natalia to take this up. So RBI has come up in the month of February this year. RBI has come up with some guidelines pertaining to transaction monitoring, pertaining to mobile apps being used for transactions. And they've listed they've recommended several kinds of controls. And so what is as a banker and as a fintech, Natalia, what is your assessment of these controls? How much will they help bring down the problem? Do you already have some kind of, are you already seeing some kind of impact of those guidelines, or do you think it will take a little longer? Okay, Natalia.
I think that was the right time to come with these guidelines, basically to set up the proper governance structure to implement for companies and banks to implement at least minimum standard of the controls for fraud prevention. Frankly speaking, I think in the fintech sector, many companies already been doing a lot of things that are set up and presented in the guidelines. Just to name a few, like various exposure limits, various controls on the velocity, on the devices, on the IP addresses. So I think all the things been already done to some extent. However, I acknowledge for many big corporations and probably small players as well that was not yet the case, and the guidelines that RBI came with really help them to understand the scale of the problem, and also understand what kind of tools and frameworks available to set it up properly. So I think at the end it helps everyone because we are fighting all the fraudsters, and whoever put the fence higher, he will be the winner. So in this situation, RBI sets the right standard for everyone to mitigate fraud at an industry level.
Okay, that's interesting. So these guidelines are more. So many organizations have already adopted these guidelines. Shilpi, what is your understanding?
Yeah, I think it's these guidelines are a sum up of all the best practices that can be implemented and adopted and which will actually enhance and enable customers to continue with digital payments in a safe and secure manner. So I think, organizations, the industry has been practicing most of these guidelines. But yes, it just gives a standard direction to all of us in terms of what is best in the industry and available today for us to prevent frauds that customers are falling victim to and continue to fall victim to.
So, Tim, are these kind of guidelines coming from regulators in other countries? And if the guidelines that are coming, are they similar or they're different?
Look, I think there are some differences. By market, there is a lot of markets are less prescriptive around authentication. What authentication that you need to use, are less prescriptive around fraud controls, but certainly very prescriptive around financial crime controls. So there is an overlap and some things. Fraud is just one type of financial crime. So I think there is. A lot of fraud stuff gets wrapped into, the financial crime. But I think, typically from what I've seen in many markets, when it comes to fraud, unless it really goes badly, the regulators tend to stay out. But when it's sort of, I was reading an article today actually.
How does India stand compared to other countries in terms of being proactive? The regulators being proactive in issuing guidelines? Are we somewhere in the top third, middle third, or bottom third? Any idea?
Look, I think it's really quite proactive. I think there is there's consistent and regular guidelines around fraud. So I think I'd say India from a regulatory perspective is more proactive than most markets. I'd say in the top third, in my opinion. And I think some of the controls, if I look at the controls around the real-time payments, the NPCI payments compared to some of the other real-time payments in other markets, there's some really great controls in India. It's been very proactive. So I'd say more proactive than many markets, definitely.
I may come to Vishwanath and ask, because you're not a bank as such, you're not a customer-facing entity. How do you see these kind of controls from regulators?
Yeah, thanks,
regulators
Manoj.
really help NPCI be stronger?
No, I get your question. Thanks for that. See, firstly, I would want to say that this is a superb document. In fact, it's a brilliant document. If any of the participants who wants to be an expert in risk management, they just need to go through this document. This 20-odd pages, if they go through it, they know A to Z of what needs to be done to kind of mitigate the risk on the digital payment space. Coming to India as a geography, so probably we are moving from cash into digital, right? So therefore, trust is going to be really important. So these guidelines will help in kind of reinforcing the trust in the digital environment. If you don't do any of this, then the trust kind of erodes. Then again, there is a possibility that the population might go back into cash. So that we don't want to happen. So any organization would, I'm sure most of them would be doing at least some of the other of the points which are mentioned in those guidelines. But ideally speaking, it will be appropriate to kind of do a gap analysis where we are on all these points vis-a-vis what is RBI recommended. What is the gap analysis where we can try and go and improve? One of the challenges which I see largely for many other financial organizations is that there are multiple departments or functions which gets involved. Therefore, the interface and the working together will become a kind of a challenge. For example, if you look at the guidelines carefully, it talks about InfoSec related guidelines. So information security has to work together. IT has to come together. Product teams of the necessary banks have to come together. In most of the banks, the product teams themselves are different for different products. Like net banking, you have a different team. Credit cards, you have a different team. UPI, you have a different team, so on and so forth. So all these teams have to work together, come together, and work along with the fraud and risk and fraud control team in order to make this as a in order to ensure that this is successfully implemented. Those I see that the gap analysis needs to be done. These are the challenges which I feel. Otherwise, I think it's a brilliant document. If I remember right, RBI had given about 6 months time for the banks to go ahead and implement this. And when it got rolled out in February, I think once it is done, the trust in the ecosystem will further get strengthened.
Vinay, if I may ask you, what percentage of your time or the IT security team's time, your team, goes in working with innovations, whether it's a product innovation or a channel innovation or a service innovation, versus running the business?
So most of the times it relates to how you're ensuring the trust while developing a new product or going ahead with a new way of communication with the customers or even partners, right? So that's where we are closely involved. And digital evolution with respect to payment, digital evolution with respect to payment is increasing, and it's going beyond the landscape which was there. Right now, fintechs, neo banking, new way of bankings are coming up. So that's where it becomes critical for people like us or even fraud management teams to closely work with the product development itself. If we go through the circular of RBI, it is addressing this clearly. It says secure by design. So to ensure secure by design, be it innovation, be it your product development, it has to be there in place when the idea is conceptualized. So by default, CISO as well as security team or the concerned control functions are part of those discussions during the initial design itself. Once the framework is ready, it gets rolled out. But before framework, there are a lot of iteration which goes internally. So RBI does talks about functionality, security, as well as performance in their recent 18th February circular, right? So those things are taken care of while designing new products or discussing new products. Not only limited to, as I said, bank. So it may be a discussion with a fintech partner. It may be a discussion with your vendors. So authentication plays a key role for us, just to ensure the identification or there is non-repetition is addressed clearly while authorization takes place.
Natalia, would you like to give the Zest Money's perspective on this, or would you like to dive deeper into this? How does it work for you?
Yeah, sure. I think I like how Vinay put it, that when we talk about fraud prevention, we think about product and actually the thoughts about fraud prevention are already incorporated in the design of new product or new propositions that we are doing for the customer. And the first things first, yes, authentication, making sure that we are dealing with a person who is sitting in front of computer and using his own identity to apply for any of our products is a key for us. So that comes with any onboarding experience that we are building, coming with any new product that we are proposing to the customer. And then, of course, on top of it, we want to make sure that any additional proposition that we do with any marketing campaigns or any promotions that are the way they are designed, that there is no either technical loophole, or some conceptual framework that allows fraudsters to enter the system or commit any fraudulent activity. So for us, we have zero tolerance to fraud as a business. And that's the key things that we are looking at. Of course, we are 100% digital product, which basically means that we also care a lot about the digital experience that the user has, about flexibility, transparency of the solution, about minimizing the friction for the users as well. But the way we, again, look at it is to always maintain the trade-off between potential opening up to fraudsters and how rigid the system needs to be. I think in the recent times, we more and more move in the direction of personalized journeys instead of just having, one solution fits all, where exactly it allows us to based on the multiple data points that we are collecting, design the journey that is minimizing the friction for the users, but also maximizes the fraud prevention on our end. So I think that's the focus for the business.
Marketing is usually in a very big hurry to launch things, to reach out to customers, to announce things. They must be putting some extra pressure on people like you.
It is true. It's always a negotiation, but I think, as was discussed earlier today, the fraudsters are moving very fast. So if you spend less time designing the product and do not take into account potential fraudulent behavior of the users, you just find yourself very quickly with a lot of fraudsters flooding into the system. So that's what we want to avoid. And again, the way we collaborate, any new campaign, any new marketing initiative, it all comes with a sign-off from risk and fraud prevention team to make sure that the things are taken care of.
Okay, that's great. So as BioCatch, what do you see as the evolution of these technologies, and how is BioCatch keeping itself up to date to be able to continue providing a certain level of security, a certain level of confidence?
Yeah, so that's a really good question, and quite topical. If you talk about so iOS 15 was released this week, and there's a lot of they're incorporating a lot of privacy and security controls around that. So for example, there's a feature where you can basically, it's kind of like using a VPN. They call it private relay, but you can have a dynamic IP address. They put you through a network just to disguise your IP address. So so increasingly, traditionally, for fraud prevention, a lot of onus was put on the IP address, the network, the device, etc. But increasingly, that's becoming the operating systems are getting tighter, but also it's with the type of social engineering, a lot of the scams and fraud actually coming from the customer's device, being facilitated by the customer. So in terms of what our technology focus on is more around the behavior. So how subconscious behavior, how you're using a device. So for example, when I'm doing my banking, I hold my phone in my right hand. I'm a double thumb typer. I've got a certain, all these subconscious behaviors are how I use the banking app. I don't even think about it, but that's just how I use it. So, understanding the behavior, you can understand what's going in a customer's mind. So in like a social engineering scenario, if I get a phone call from a scammer, I behave differently, because I'm being coached to do something. Normally if I do my banking, I log in and I do bank with purpose. I know why I'm logging in, doing my banking, paying a bill, transferring money, getting a statement, whatever that might be. In a social engineering scenario, I'm being coached. I don't know why I'm logging in. I get a phone call and then they say, do this, and then do this, and then do this. And my behavior, is different because I'm not behaving in a purposeful way. So it's really, moving towards, the little, granular behavior, rather than, are you logging in from your normal device? Are you logging in from your normal network? That's really where the controls are heading.
So there are different customer segments. There are retail, there is SME, there is corporate, there is rural markets. So obviously the kind of frauds and threats that emanate from these customer segments are different. So as a bank, what is your approach? Are you looking for a unified approach to tackle all kinds of frauds with different customer segments? Or does your solution tend to be more segment specific? Manish, maybe you can share something.
It's a very, very interesting question, Manoj. And I would put it in a little different context. Okay. Fraud is ultimately a behavior. Okay. So the way we are approaching at our bank, and I think we heard Natalia also. So ultimately what customer wants is a frictionless journey. And that is going to be the reality. Whatever we talk, we can't, because we can never say that because of fraud, you have to, outlay the experience. Right. So what is needed is a frictionless journey. What we need is AA. AA is authentication and authorization. And it has to apply in every walk of transaction, if I have to say, whether it's a financial transaction, non-financial transactions, the time or the methodology through which the customer has to enter into a system, and then he has to perform a behavior or a transaction. So the time or the way he has to enter the system, that's an authentication stage. When he has to perform any transaction, that's an authorization stage.
Okay.
In a very simplistic way. Okay. And we cannot restrict this definition only for one particular segment, for one particular channel, or one particular financial transaction.
Excellent.
Okay. So this is the approach with which we are working at our bank. We are trying to bring everything and think it through on this perspective, so that, and then if you got this right, then rest everything will fall in place.
Okay. So it is these two A's that you have to focus on.
Yes. So it starts with A and ends with A.
And ends A to A. Okay. Sounds good. Sounds interesting. Does any organization here have a different approach? Does anyone have a more customer-centric approach, treating customers differently from the fraud perspective?
So Manoj, I would want to just add a few points, not
Yes.
kind of differing with Manish, but just to supplement what Manish had said. So basically, we are moving towards the world of authentication, right? So authentication traditionally in India has always been OTP. I think we have come to a stage where OTP is, it's going to be curtains for OTP, right? There are multiple modes of authentication. Just slightly to take on from what Tim had said, depending upon how you type the same password, vis-a-vis I typing the same password, it could be different. The system can today has the capability to identify, somebody else just type the password, the way you use the keystrokes and things like that, right? And also there are other modes such as voice, face auth. There are various forms of authentication, biometrics is coming, etc. Right. So I think from a multi mode of authentication is where the future is going to be, and probably the second factor could be a variable one. In some scenarios, you may use voice, some scenarios you may use face, or some case where the bank has a doubt, they may further step it up by asking the customer to repeat a phrase or whatever, and identifying the voice and things like that. So that will kind of make life more difficult for the fraudster. When authentication itself various modes of authentication itself will kind of strengthen the transaction. That's where I feel the market is going to evolve, or it's already started evolving in that direction.
How early can we detect? What are the early signals you'd like to focus on in the current scenario, in the forthcoming scenario, to detect these potential fake authentications? Vinay, something?
Yeah. Sure.
And then maybe Shilpi?
Yeah, Manoj, I would like to add with what Vishwanath and Manish said. So I believe identification should come first. So identification, authentication, then authorization. Okay. So, and going forward, I'm saying passwords are going away. OTP, as rightly said, there may be passwordless authentication or frictionless authentication that may be coming up soon with the technology evolutions which are coming up across. So that's where identification will play major role. So once you have identified it's the same user or same authorized person, then it goes for an authentication wherein challenge can be initiated post that, and then the authorization will take place. And there will be one more A, which will be accounting, which will be used for fraud risk management as well as post transaction validations and reconciliations and all. So these are a few critical factors which will be coming up. And this identification, when you talked about the face authentication or a kind of biometric authentication, like nowadays it's in real-time onboarding. Most of the banks are providing those kind of services. So deep fake kind of risk becomes real. So wherein quantum processing coming into picture and AI ML based technologies coming into picture, wherein your face as well as identity can be easily impersonated, and that can be exploited further to carry out a confusion not only to the customer but also to the people who are authorizing it, be it a bank or any financial interface or e-commerce interface who is communicating with them.
Shilpi, if I may ask you slightly a variation of this question, between business perspectives and technology perspectives, what do you see the balance in trying to ensure, give the customer the confidence that yes, they can they're safe, and the whole transaction, the whole session will be, not just transaction, the whole session will be frictionless?
So I think, adding to what Manish, Vishy and Vinay have said, I think it's all about the speed of the authentication, which is a deciding factor in the complete journey. And I think with the evolving methods that some of them we've spoken about, including a new method where you allow the customer to decide on the OTP. So you have an automatic authenticator available with customers on their device.
Okay.
Something like a Google Authenticator that you just, I'm just giving an example of what you can say, that where you give the control also to the customer to authenticate themselves. So I think that, and how we at the back end, identify customers through their behavior patterns is something that will enable a frictionless journey. And I think the industry is all working towards that and has already implemented many of theirs. And that's the reason why today, we as a country have moved higher up in the ladder on our digital payments. I think it's a proud moment for all of us. But that's been enabled because of these frictionless journeys with adequate controls built in. And digital technology authentication methods.
But I want to come to Tim and ask, in catching all these potential frauds, so one objective is obviously to catch as many frauds as possible. And other is obviously to also minimize fake positives. So what has been the progress in this at your organization and at customers whom you serve, whom you work with, balancing between catching as many and fake positives?
Yeah, sure thing. I mean, I wanted to sort of tie it into the previous conversation in terms of authentication, and a lot of historically, we put a lot of onus on points in time in the customer's digital journey. So, for example, we'll do a lot of analysis as they log in and a lot of analysis when they do a payment. But a session might be 6 minutes long, for example, and there's a lot of behavior happening in that 6 minutes, but we're kind of looking at, traditionally, we've gone point in time, and we'll have a really close look at login and we'll have a close look at payment, but we're not looking, there's 6 minutes of behavior in between those things. So, continuous profiling throughout, passively, can give you an ability to make to detect a risk earlier on before you get to like an all or nothing decision, like on a payment. So, so because risks can come during a session, some risk may only materialize part of the way through a session, once a customer's being authenticated, particularly in like social engineering or something like that. In regards to your questions regarding false positives, it's by having a really a deep understanding of behavior, we can be very accurate around around a session and the validity of a payment, for example. So, for example, traditionally we might look, if you're paying someone you've never paid before and it's a large amount of money, that might look risky, but that in itself is going to have very high false positives.
Does BioCatch also have some kind of suggestions what to do next? Or do you just leave it to the bank? Do you give some kind of trigger, or do you give some kind of confidence factor? How does the system tell, revert based on whatever it has figured out?
Yeah, I mean, basically we're behavioral signal. So, the bank knows a lot of information about the customer and what they're doing, but BioCatch is giving that behavioral signal. Is this session, does it look like Tim's behaving like he normally does in a session? So it's very much a signal to make a better decision. But the decision could be anything from, doing more authentication, or maybe holding a payment, or even, something that we're starting to see, particularly in like markets like the UK with these social engineering scenarios, where more authentication won't solve for it. So if you say this is risky, but if you add more authentication, customer will authorize it and it will just go through if they're being social engineered. So they're looking at things like real-time education in a session to say, are you, is this regarding investment. Have you just been called? Like they're actually augmenting the session, the customer's experience in session based on risk.
Do you have any different kind of approach because of the fact that you're not a bank?
Definitely, I think we are missing that part of information where the agent, for example, can physically see the customer. But at the same time, I think the number of data points we are collecting about the user's behavior is probably even more what traditional banks are doing. Like on average user, we are collecting a few thousand data points. Some of them we used for fraud prevention, some of them for risk assessment. But I think, as Tim said, what is important for us is not only touch points with the customer on certain time slots, like onboarding experience, authentication experience, or transaction experience, but capturing what exactly user is doing between these actions. Does the user actually log into his account? Is he going and checking certain offers we have, for example, or verifying payment information when the due date is coming. So all this type of behavior becomes quite important, especially when combined with other signals. And this is what we are looking at. And I think that also allows us, to capture any potential fraudulent intentions or behaviors much earlier than, for example, 30 days past due date, where traditionally we were looking at how to define the fraud, right? So instead of waiting for 1 month and more, certain behaviors can already earlier indicate that there is some fishy activities happening on the account. So that's not only the way for us to prevent, but also to measure fraud in a more accurate way and classify what kind of fraud is happening.
So friends, we are at 4 o'clock. It's time to wind up. I invite all of you to make closing comments, closing observations, or to comment on something that we have not discussed but you think is important. Maybe you can take half a minute each. Who would like to start?
I'll go first, Manoj, if that is okay. Yeah,
Yes,
I think we spoke a lot about customer-centric fraud, but it's also equally important to talk about data breaches, right? So that is much more significant as compared to a customer-centric fraud, because it erodes the trust in the ecosystem. Huge chunks of data has gone, and then it's a big firefighting exercise after that, right? And worldwide, we have seen at least 20 plus big data breaches in the last year or so. In India is no stranger to this. We have had at least in excess of 20-25 suspected data breaches, and whatever investigation happens, it comes to a naught, right? Most of these are PCI DSS organizations, certified organizations, but it looks to be a point-in-time activity, and there's no continuous maintenance of those standards, adherence to those standards. So therefore, I think tokenization is going to be the next big thing for us, which the regulator is also pushing. It's going to be really important because you kind of remove the data out of the ecosystem, kind of make the data which is available as useless to the fraudsters, right? The token data which will be available, which will kind of replace the actual card information, will be useless in the hands of the fraudster. So I think that is definitely going to be the next big thing. I think once we kind of take care of that segment, plus kind of put in a lot of controls on fraud mitigation, all of which we spoke about, including quite a few things on behavioral biometrics, seamless second factor authentication, and of course use of techniques such as artificial intelligence and machine learning models, then I think to a large extent the ecosystem will be much more secure than what it is today. Thank you.
That's great. Yes,
I completely agree with Vishwanath on that piece. So data governance is going to be a big thing apart from tokenization, which is also going as a channel. Third will be with respect to the customer awareness. There are a lot of innovations which are required from the ecosystem players to get customer aware about the product its uses. So by default, customer get trust the product once the transaction is done, and it is many a times he's or she is not aware of the misuses or the frauds which are coming up. So, and fourth, of course, privacy. which will be again as part of the data breach and data leakage control point of view. So these are the four big things. And fifth one, maybe the third party integrations as part of the ecosystem. Since new players are also integrating with the bank ecosystem or the bank chain, this should not be becoming the weakest link around this. So as rightly pointed out by Natalia, many a times, since the sourcing happens from them, they have a lot of data to carry out analytics. That's where it becomes very critical for those interfaces to ensure the security control is at par with bank or maybe more than bank requirement. So these are 3 or 4 different areas wherein a lot of focus will be required. So we as an ecosystem are evolving, and I'm sure we will take it forward at next level.
Completely agreed. Yes, RBI is having bigger and bigger, more and more entities to regulate to make sure that the whole ecosystem remains safe. Great,
Sure.
Thank you. Shilpi, would you like to say something?
So I think there is no one solution which is the panacea for frauds. So I think as the industry, we all have, we're bringing together various solutions which will solve one problem. So I think it's how every institute blends these solutions in for a frictionless journey for the customer is what is going to be the winning story for us as institutions. And I think today we've all discussed so many solutions, and I think progressively there will be more coming as we just turn around the corner.
That's true. That's true. Thank you. Thank you, Shilpi. Manish, would you like to say something?
No, I think it has been very well summarized by my esteemed other panel members. The only thing I would want to state is, and this starts with the initial question that you had put up. Will the fraudster be ahead of us? Answer is the fraudsters will always stay ahead of us. It's a response time that we have to work on as an ecosystem. That as soon as we get new MO, we get new case, we get new understanding, how do we respond to them and how do we mitigate that? That is going to be the key, and this is going to be a continuous journey.
Yeah, I think I will continue the idea that Shilpi was developing before. I think we, as all individual players, done a great job in fighting fraud. I think what definitely will help is more consolidation on the industry level and creating tools that allow all of us together to be more efficient in preventing fraud. Like, just to give you an example, like similar to credit bureau agencies, to create the database, for example, of the real-time fraudsters. That would, I think, be the solution that everyone will benefit in the industry, and that will allow us to be as quick as possible in reacting and actually being even more proactive rather than reactive in tackling fraud. Because there are a lot of questions that create a lot of behavioral, a lot of regulatory challenges, but why not to look at it more as an ideal solution, and we can all work together to reach it.
Very, very true. Very relevant. Absolutely. Thank you so much. And so, Tim, would you like to share some closing comments, some observations?
Yeah, absolutely. I think something that Manish said that resonated with me is all around the agility to respond and the how dynamic that fraud is. And really, my personal view, and Natalia touched on this before as well, is it's all around data. So if you've got access to the data, you've got an ability to be agile and to respond to these threats. There'll be scams that we haven't even thought of that we'll need to deal with in the next 12 months. So data and profiling what your customers are doing really give you that ability. I think sometimes the controls we rely on that are customer-facing controls, like a SMS OTP, are hard to implement and hard to change because you're changing the customer experience. So, to manage fraud, you need sort of a combination of those customer-facing controls, like strong authentication, but with complementary sort of what I call below-the-surface controls, which are data-centric, behavioral-centric. So think that's really the last point that I wanted to make.
Great, thank you so much. I'll leave you with one comment, which is my wish list. My wish, one single wish. I'd like to see the needle of frustration shifting from the customer to the fraudster, from the customer being frustrated to the fraudster being frustrated. I do hope all of you and people like you around the world come together and make that happen. I'll be really happy personally if that were to happen. Thank you so much. Thank you very much for a very interesting discussion.
Thanks,
Thank
everyone.
you. Thank you so much.
Thanks, everyone.
Thank you, Manoj.
Thank you, everyone.
Bye.
Bye bye.
Thank you. Bye.
Bye bye.